Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Anuj in the studio and Sonia joining from home. The handover from Wall Street and Asia, I need hardly tell you that statement we played out to you from President Trump has played havoc with the bull positions, and the bulls feel trumped, as I put it. But, let's just wait and see how Indian markets react. Yesterday, we had FIIs buying in India. We had the Nifty cross that much feared 11,550 to 11,650 resistance mark. And today morning, the SGX Nifty is not yet showing that level of downcastness that Wall Street and other Asian markets are showing. So this once will local factors trump the global factors is the question I'm asking. I'll try and answer it later, but for the moment, Anuj, your view, does it, yes, we've had a strong 4-day showing. Yes. Do you think there's enough, tailwind for us to ignore global cues?
Well, good morning, Lata. Well, the SGX Nifty is saying that, all of a sudden that's turned back in the green. Look, I think Trump is one of the best negotiators. I think he now wants to negotiate with the voters. That you've got to vote me if you want the stimulus. But there was this collapse that you saw last night in the US market, and I think that would test the market's texture today, Lata. Anyway, the market's risk reward is not in favor of fresh longs. I mean, if you are already long, you just want to stay put and see if the market is collapsing or not. But if you want a fresh long, then I think you got to wait. The market always gives you correction. Last week the market gave you that correction. Those are the buying opportunities. Also, because the markets now move to the higher end of the range, you could argue that it's actually crossed that range. But even then, purely from the risk reward point of view, fresh long may not make sense. On this FII buying, I think very interestingly, yesterday HDFC Twins accounted for 60% of the rally. And HDFC alone saw delivery volume of about 1,400 crores. So my sense is that out of this 1,100 crore buying that you saw in cash market, a large part of that would be HDFC. And almost every day you're seeing sector, stock rotation. I think previous day it was TCS, yesterday it was HDFC. I think one day earlier it was something else. But one large index stock is surging by rotation, which is very interesting. Just one technical point, yesterday was the first sign of profit taking by FIIs in the index futures. They unwound about 5,200 longs. So I think, as I said, perhaps you don't want to initiate a fresh long. You want to see if the market gives you a dip. If you're a compulsive trader, perhaps, adventure a short with a 50, 60 point, stop loss, maybe a good risk reward trade. If that works or not, I don't know. But, some traders may try that. TCS results come out post markets today. The question I'm asking is, how much is now already in the price? I think a lot is already in the price. The results, strong results, buyback, I think all of this is baked in. So I don't know if TCS would be able to provide much support from here on. But let's see. As of now, the SGX Nifty has turned in the green. But it will be interesting to see how the global markets move for the rest of the day. But purely from the risk reward point of view, perhaps not a time to take fresh long.
There are a couple of more positives. The PLI scheme has actually hit the ground with some people getting the permission, as well as one more large investment in Reliance. To counter it, there is a very important letter from the Reserve Bank to the private equity body saying that Mauritius-based guys can't invest in NBFCs. Now, that can be finance sector negative. We have to wait and see how that pans out. But good morning, Sonia. What do you have for us?
Hi, good morning, Lata. Good morning, Anuj. So Anuj was making this point about the SGX Nifty being in the green. It's up 33 points. Even the Dow futures actually in the last 1 hour moved from red to green, and Dow futures are now about 60 points higher. So perhaps there could be a lot of volatility in trade. Let's see how that pans out. Just a couple of points, big buying by FIIs, 1,400 crores in HDFC, as Anuj pointed out, 600 crore in TCS. There was also buying in Tata Motors after that strong JLR update. So we saw about 300 crores buying in Tata Motors. But Anuj, just a two-part question. You mentioned on TCS, do you think that, although a lot of the good news perhaps is in the price, as you said, do you still expect to see buying action ahead of the numbers because of how strong the numbers are expected to be and the buyback? And two, that 200-day moving average at level of 11,736, do you think the bulls have enough ammunition to take that out?
Well, Sonia, on TCS, I think the point I'm making is that we are at an all-time high and the stocks run up a lot, and valuation-wise as well as trading at its highs. But the fact that IT is a leader is well documented, and as you saw yesterday also, the dip was very sharply bought. And also, keep in mind, today perhaps there's a bit of a negativity on this H-1B visa issue, but last time we had something like this. The market just bought into that. This is one sector where you have a lot of visibility, and that leadership is intact. Is there a possibility of TCS hitting 3,000 before it hits, say, 2,000? I think your money will have to be on 3,000. So that I think nobody is debating. Just from the near-term point of view and from positioning point of view, I think the market's actually baked in a lot. And I mean, unless they come out and say that, okay, things are looking so good, which is not TCS's habit, by the way. But unless they come out and say that, okay, look, we are all guns blazing now, then perhaps a bit more on that. But it's run up a lot from that 2,300 to 2,700. So perhaps a lot is priced in.
Yeah, actually, TCS was the first to say that they will reach pre-COVID levels by the fourth quarter. So come Jan, we are already in they were the first to say that even at the height of the COVID crisis. Yeah. So if things have improved, then maybe the management talk will be very important today. Well, there is another important issue I want to discuss about possible GDP upgrades. But I want to make that very clear. But we'll come to that in just a minute. First, let's get other people's equity advice in. The expert we have is Vikash Jain of CLSA. Vikash Jain says, coming out of the lockdown, Q2 FY21 is expected to be a less weak quarter than Q1 FY21 against a 38% YOY fall over the last 2 quarters. They forecast pre-exceptional profit before tax for the CLSA India universe to decline 14% YOY, with all sectors other than cement, IT, healthcare, power and staples to report year-on-year cuts. Property, many auto names and Z will see sharp year-on-year cuts. Domestic-focused companies are likely to register a lesser 3% year-on-year slide in profit before tax. For global-facing sectors, the poor performance of oil and gas will hurt. Commentary on festive demand, trends in loan books, post-moratorium return of migrant labour and sustainability of cost savings will be the key focus areas.
All right, let's get you some money market views as well, right, and how to approach that space this morning. Kunal Sodhani of Shinhan Bank is our guest for the day. He says risk aversion increased as the US stock stumbled while bonds soared after US President Donald Trump abruptly cancelled talks on fiscal stimulus until after the election, and the Fed Chair Powell also warned on the economic recovery. For the dollar INR, broader consolidation to continue between 73.20 to the 73.80 band.
Okay. And on bonds, Dhaval Dalal of Edelweiss says with uncertainty of MPC and supply out of the way, they expect market to focus on September CPI and economic recovery. He remains bullish on bonds and expects them to trend towards 5.9 in the medium term.
Okay, Lata, I don't know if I heard that correctly, but did you talk about GDP upgrades? I think if